Alright, so I wanted to go over my trades for the week. Now, last week wasn't a great week. Can't complain. I mean, it's still profit, but it wasn't the average that I was looking for. Closed the week with a total of 289 net USD. So yeah, not too happy with that. And I find the reason is I didn't take on that many trades because I had a lot of open trades. As you can see, these are all open trades and a lot of them are breached. At least 6 of them are completely breached. So it's taking up more buying power than it should. And so it's sort of scaring me on from taking on new trades, especially trades that would have been easy winners for the week. So let me go through over the trades that I did this week or that I closed this week. So as you can see, there are only 4 trades, total of 289 USD. So the first one here, let's go over the first one, Tattooed Chef. So this was a covered call that I opened March 4th and I closed. It had an expiry of April 16, but I closed March 15. So the trade wasn't open that long, probably 10, 11 days. That gave me a net profit of $97.60 US. So if I bring the chart in here for Tattooed Chef, so we said it was March 4th. Let me just put the spreadsheet on the other screen here. So March 4th, Tattooed Chef, so I'm going to have to look at a 1 month chart. So March 4th is around here. So before it dropped all the way to 17.4. So I still had a decent entry. So I entered for $16. So it was a 17.5 strike. I paid $16 to get in while the stock was trading at around $19. So basically I bought the shares at $19, but I sold a call at a 17.5 strike. It was big enough that allowed me to get into the trade for only $16. So that's why if you look at the spreadsheet, you only see that it cost me $16 to get into the trade at a 17.5 strike. So because it's a covered call and I sold the 17.5 call, that means my max selling price for this trade come April 16 is going to be 17.5. But I got in at 16. So my max profit is basically the difference, 17.5 minus 16. So it's $1.50 for if the stock is trading above 17.5 come April 16. Now, March 15, let's look what happened March 15. The stock was trading at around 22. So because of that, I was able to get out of the trade. I didn't have to wait all the way to April 16. I was able to get out of the trade for 17.09. And that's why I have this net profit of 97.6 instead of waiting for an extra month to collect the remaining 40 cents. It wasn't worth it. The next trade here was open door, March 4th as well. So let's look at the chart. So open door, March 4th. Let me zoom in just so that it's more obvious. All right, so 1 month, March 4th. So as you can see, it's right before the drop here. So March 5th would have been a better entry. Regardless, I got in March 4th. I mean, it's hard to time it perfectly. So I got in March 4th. And how much did I pay to get in? So I sold the 25 strike. I paid $20.80 to get into the trade. But because I sold the 25 strike, it's a covered call. My max selling price is 25 come May 21st. So I went all the way to May 21st, making my max profit, the difference here, 25 minus 20.8. I got out of the trade the same day as Tattooed Chef. So it's funny, I got in and got out at the same time. All right, so I got out for $22 and I got out March 15. So once again, this is pretty good because I didn't have to wait all the way to May 21st. Although my max profit was about $4, I only collected $1, so $108 net profit, and that happened when open was trading at around 28. So I got in when it was trading at 24. I got out when it was trading at 28. So some people might say, why don't you just buy the stock at 24 and then sell it at 28? You would have made $4 instead of making $1. The problem with that is I don't know what's going to happen. I don't know that it's going to go up to 28. When I got in when it was at 24, my cost was 20. So I had room to the downside for protection. And I basically don't need the stock to go up for me to make that premium. The stock can stay flat and I'll still make that premium. But luckily it did go up, so I was able to collect part of that premium quicker. So that's why I don't necessarily swing trade or buy the stock. and then wait for the stock to come back up, because I don't like waiting. I'd rather collect the premium right now, and if it goes up faster, then I get the confirmed part of the premium quicker. And if it doesn't go up, well, I'll still keep the premium, but I'll have to wait a bit longer to confirm the profit. So regardless, so I was able to get $1.08, so $108. So with these two trades, that was about $206 US. Next here, you've got Unity. So I don't know if you remember this trade. I opened this trade when Unity fell after last earnings. It fell pretty hard after last earnings. I opened a put spread at a 105-100 strike. So my short strike was 105. Now let's look at the chart. This one's interesting. So February 5th. So Unity February 5th. So right now it's trading at 100, but I already closed the trade, so I don't care right now. But if we look at February 5th, so I'm gonna have to go a bit further. So February 5th. So as you can see, it's this drop over here. I got in at this drop, thinking it was a good entry because it fell hard after earnings. It went from 149 to 128. So I went to a 105 strike. I think as long as Unity stays above 105, I keep that $1 credit that I collected, or 99 cents. Now instead, Unity kept dropping and dropping, and at some point it was trading at 92. So my 105 strike, this is my short strike, my 105 strike was completely breached at some point. I didn't do anything. It had a March 19 expiry. And finally, when it came back up this week, because March 19 was the expiry, when it came back up, I closed it March 16. So when it came back up to around 106, I was able to close it. March 16 is over here. So when it was trading at 108, I was able to close it for, I think I closed it for 40 cents. Yeah, I closed it for 40 cents. So it's not much of a profit, but at least considering that it was completely breached, I was happy to get out with $46 net profit. Now this is after commission. It would have been actually maybe $60 of profit, but because of commissions, I'm left with $46. And then finally, the last trade of the week was a put spread on Coop or Coupa. So this was an earnings trade that was very weird. I'm going to show you right now. So March 16. So let's look up Coop, C-O-U-P. So all we need is basically 5 days. So so March 16, it's trading around here, right? 270. So this was before earnings. So I sold a put spread at a 250 strike, as you could see here, 250, 245, collected $1, March 19 expired. So I keep the dollar as long as Coop stays above 250 by March 19. Now the idea with earnings is usually I try to close it the next day because volatility drops in the premium, so I can close it the next day if the stock goes up, if the stock is flat, and if the stock drops a little bit, not too much. Now after hours, Coop, after hours, so after earnings was announced, Coop was trading at 300 after hours. So it went from 270 to 300 after hours. So to me, that's an easy close the next morning. It's an easy win. I'll close the put spread for 10 cents or 20 cents. That's after hours. But the next morning, it opened at 250, as if nothing happened the day before. 300 just disappeared, never came again. So it just opened at 250, so completely not a good trade anymore. But I held on to it because it felt ridiculous to me that it was going to stay below 250. I saw it trade at 300 after the earnings was announced. So why would it drop to 250? But then as you can see, it kept dropping, went to 246, and then went back up the next day to 260, or the same day. And then the next day below 250, it kept hovering near 250, so it was very stressful. And it actually closed the week at 248.73. So if I held it till expiry, I would have had to pay $1.25 to close the put spread. So basically that means that I would lose about $25 on this trade if I had held to expiry. Now I didn't hold to expiry. I had an order in for 50 cents to close it for 50 cents. So I collected $1. I had an order to close it for 50 cents, which is what happened. So that gives me a net profit after commissions of $37 US. And that happened when on Friday it was trading at around 253. So I had an order in to close automatically if it's possible. So when it was able to close at 50 cents, it got filled, and that's it. But gladly I didn't hold on to it because it would have had to pay. I would have lost $25 plus commissions. So yeah, so these were my 4 trades of the week, giving me a net profit of 289. Now there is another trade that I didn't close, but it was a winning trade that I rolled for more credit, but I'm not gonna include it because it is a covered call trade that I rolled for more credit, and because I'm still in the trade, it's still open. It's this one here. Where is it? It is higher. If you see it, let me know. So yeah, it's this one here. So this one I rolled, collected an additional $1.96, but I could have closed the trade for about $9.95. That would have given me about $1.10. So I could have collected. So the week I could have added an extra $110 for the week, which would have brought me exactly at $400, which I think looks better, right? For the week, $400 as opposed to $290. But because the trade is still open, I didn't include it. But that means that the week that I end up closing this trade completely over here, the week that I close this covered call completely, it's probably gonna be a big week, because the profit alone right now will be about $320 for this trade. So how much buying power did these trades take? So Tattoo Chef is a covered call. So basically it's what I paid. So this trade took $1,600. This one's a covered call as well. It took what I paid, so $2,000 or $2,100. Unity, it was a put spread, so it's the difference between the strikes minus the premium collected. So 105 minus 100 is 5, minus $1 is 4. So I did one contract. So this trade took $400 of maintenance excess. This trade can only be done in a margin account with the level 3 options. Coop was a put spread as well, so same thing, took $400 of maintenance excess. These ones, the covered calls, they could be done in all accounts, even registered accounts, as long as you have level 2, which is free, but you just have to request it. Now, my open trades. So which ones are completely breached, which ones are doing okay? So this one's completely breached. This one is completely breached. This one is completely breached. So Peloton 120 for April 16. I think Peloton's trading at 107, I think. Peloton 108, not bad. So yeah, 12 points in the money. This one is breached. This one is completely breached. This is a put spread on Snowflake. Got a 240 strike. And if we look at Snowflake, where is it trading at? I think it's trading at 217 or something. 220, okay. So I'm 20 points breached, so that's not good. And then I've got another Peloton at 105 strike. So this one's not breached, but it keeps getting breached. But for the moment, right now, it's 3 points out of the money, so it's 3 points safe, but it has to stay this way till April 16 for this trade to be a winner. Curiosity Stream is breached, but not by much. This covered call here is breached as well on HIMS, but not by much either. Lemonade, I don't think Lemonade is breached, but it's close, but it's not breached. So I've got a 90 strike, and if we look, yeah, it's trading at 99, so I think it's good. I just have to hold on to it a little bit longer, but it's not breached. I think it got breached, and I think right now it's safe or very close. I think it breached 74, yeah, so I'm 50 cents in the money, so that's not good. This one's good. This one's a good trade. This is a trade that I opened on Friday. So I opened this trade because Visa dropped 5%, and I thought it was ridiculous. So I sold a naked put all the way to May 21st expiry at a 190 strike, and I think 190 is safe for Visa. That's just my opinion. And I collected $3.90 for that trade, and I'll try to close it maybe for $2 or $2.50. I did a covered call on Palantir as well at a 24 strike. I paid 20.4 to get in, May 21st expiry, and I think on Friday I could already close the trade for about $21. Not enough to close it, but it's already showing a small profit, so this one's fine. This one's fine as well. Luminar is breached. RMO is breached. HIMS is breached. Sumo is completely breached. So this one's, I think it's 10 points in the money. So let's look up Sumo. SUMO. 1975, so it's $11. Man, that's bad. $11. Okay, and I've got 2 contracts on top of that. This is a cover call in SFT. Just opened it, not bad. So this was a good RX. So this was an earnings trade that I opened at a 40 strike, collected $1.80, and then it got breached, and it expired March 19, and I wasn't able to obviously wasn't able to close it for a profit, so I had to roll it. Could have rolled it to April for the 40 strike and collect maybe $1.50 of additional credit. I decided to bring the strike lower, so I went from 40 strike to 35 strike to make the trade safer, and I went to May 21st. I had to go an extra month away. I collected 50 cents, so it's written over here $1.80 plus 50 cents. So now I've collected a total of $2.30 of credit. My strike is 35, so my break even is 35 minus 2.3. So my break even is 32.7. So it makes the trade safer. And yeah, so now I just have to wait, just hope for GoodRx to stay above 35 by May 21st. Or as time goes by, I can probably close this trade for maybe, try to close it for $1.30 even, $1.20 maybe, before May 21st if possible. This one here is breached as well, and this one's a covered call that's breached, but it's all the way to October 15, so I'm not concerned about that one. So the ones that I'm really concerned about, they're about 6. So it's this one here, Root, Peloton, Snowflake, so that's 3, and then there is RMO, so that's 4, and then there's Sumo, that's 5, and I think that's it. So about 5 that I'm really concerned about because they're completely breached. The others are slightly breached, so not too bad. Alright, so my P&L for the first 3 weeks of March is right now 2,900 US. Obviously, most of it comes from the first 2 weeks because this week was only 290, but everything counts, right? Hopefully we've got one more week to go in March. We've got 1 week and a half. So hopefully, I think it looks like I'll be able to surpass January, and I don't want to jinx myself, but I think I can surpass January, so that would be good. Unless I book some losses, but hopefully I don't. We'll see. And there are 2 earning trades that I plan on making this week. All right, so I'm gonna try to play Adobe, a put spread on Adobe at expected move, and Restoration, whatever this is, RH, because I played them before. Oh, RH I played before and it was successful. I played it twice. Adobe ended up being successful, but it took some time. But if the expected move is high, I'm going to play both put spread for the same week expiry. I don't think I'll be playing anything else in terms of earnings. Alright, so these were my trades for the week. So if you have any questions, leave them in the comment section below. And if you want to join the Trade Alerts group on WhatsApp, there's a link below. It's $25 a month. I'll be sharing my trades as soon as I place them. And like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. And if you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.